video, we're going to be talking about specific policies just related to the 2016-2017 budget that are designed to either boost equity or potentially policies that are going to hurt equity in this year's budget. First of all, we discussed in the last video that the stance of the budget can impact equity, so being a mildly contractionary stance this year could have negative implications for equity because people will be spending less and that can cause more cyclical unemployment. This is a question we discussed in class, so I'm not going to go into that too. These are just some other questions related to equity from previous exams. Another one where they asked you to explain two discretionary budgetary policies, so any deliberate policies announced, and this was in the 2014-2015 exam, and explain how these policies are likely to impact both equity and Australian living standards. And any question that you're linking to equity, you want to be making those links about talking about the Gini coefficient, talking about potentially less people living in absolute poverty, or reducing the gap between low income earners and high income earners, or having more people having a dignified standard of living. So, policies from this year's budget. First policy you can talk about is the Youth Jobs Plan, or PATH, sorry. We talked about that a lot more in the last video in full employment, but the idea of that policy is to try and get people into work, try and give them access to a market income, particularly low income earners that have been, because they've been youth unemployed, they've been particularly low income earners, so we're trying to get them into work. The reduction in the superannuation tax concessions is another one. This is the big policy that I want to address in relation to equity and how it's helping equity for this year. The reduction in superannuation tax concessions for high income earners, with a low income tax offset for low income earners. So what they're basically doing in this year's budget, the government has lowered the income you're allowed to earn before you start paying 30% superannuation contributions on your tax. So any money that high income earners pay on their superannuation used to be 15% up till you got to $300,000. Now it's going to switch from 15% to 30% once you hit $250,000. So essentially any money they're putting into their superannuation from an income of anything above $250,000 will be taxed at 30% instead of 15%. And that makes quite a considerable difference because they'll be paying an extra 15% tax on any super contributions above $250,000. So the high income earners are going to be paying considerably more tax now on their superannuation contributions. And that's good for equity because it's hurting technically the disposable income of high income earners and reducing the gap between high income and low income earners. In addition to that, so first of all, just those with an annual income of less than $250,000 will pay the lower 15%. Those that are earning above $250,000 will pay double that rate at a rate of 30%. And it will reduce the gap between high and low income earners and help to improve equity. The other thing that's directly related to superannuation is low income earners are basically going to get a refund on some of the superannuation they pay. So the Treasurer has announced the low income superannuation tax offset, which will give people with an income of up to $37,000 a refund of up to $500 on their superannuation contributions on the amount of tax they pay. So if you're putting a certain amount of money into superannuation, you might be putting, say, $4,000 into superannuation and paying tax on that. You would be able to receive a refund up to $500 on your super account tax that you're paying. So it'll give people with incomes of less than $37,000, and this is often related to women that are out of the workforce for certain reasons, particularly to have children. It's going to give them a refund of up to $500 in their super account of the amount of tax paid on their super contributions. So rather than that going to the government, they're going to get $500 back. And again, that's going to help boost their level of super and make it for a more equitable distribution of income. That's the main policy, and you've got to be really strong to linking it to reducing the gap between the rich and the poor. Basically, it's all about trying to make it a more equitable distribution of income. Other policies, these are policies that are hurting equity. So we've discussed a couple of policies that will help equity, some things that will hurt equity. One, the personal income tax cuts for middle and high income earners. So you only get access to those if you're earning over $80,000. They're going to remove the budget repair levy. So the budget repair levy was a 2% tax on those earning over $180,000. Because they're getting rid of that, those people that are earning over $180,000 won't be paying as much tax. They're also delaying childcare subsidies, so they intended to bring in childcare subsidies of up to 85% of childcare costs, particularly for low-income earners earning a combined income of less than $65,000 per family. They're going to delay those for another year, so that's bad for equity. Another thing hurting equity is the increase in the excise tax on tobacco, because that's a regressive tax. Basically, the price of tobacco is going to go up around 12.5% every single year, and that's going to make it harder for low-income earners to afford smokes, push smokes above $40 a pack, and will have regressive effects on the economy. The main thing that's going to hurt equity from the budget is that they're extending the Medicare rebate freeze until 2020. So basically what that means is that the government is basically gives rebates to doctors every single year. And what they're going to do now is, instead of increasing those rebates in line with inflation like they used to do, they're going to basically cap them at the same amount every single year. So instead of the rebate that the governments are giving the doctors continually increasing by around 2 to 3%, that basically means that they're going to not increase that. They're going to keep it exactly the same rate. And what will end up happening is that doctors won't be able to afford to bulk bill patients. They will have to pass on some of the costs from the reduced assistance they're getting from the government onto their patients. So the decision to extend the freeze on Medicare rebates until 2020 means that payments made by the government to general practitioners will not increase in line with inflation. The doctors are likely to pass on the rising costs to their patients through higher co-payments, and fewer doctors will be able to bulk bill or pay for all their patients' expenses. So more people will be paying more to go to the doctors. This is particularly going to hurt low-income earners because it has regressive impacts. Even though it's not directly a tax, they'll be paying a higher percentage of their income to go see the doctor. To ensure that their medical practice remain viable, doctors are going to be passing on the costs, and that will hurt low-income earners more than high-income earners. So, to summarise the impact of the 2016-2017 budget on equity, you first of all would need to begin with the stance, and say that the mildly contractionary stance means that the government is injecting less back into the economy than what they're taking out. This could have negative implications for aggregate demand and increase unemployment, which could lead to more people on transfer income, increase the gap between high and low income earners, and perhaps mean that more people are living without a dignified standard of living. So the contractionary budget is bad for it because it reduces aggregate demand and could increase unemployment. When discussing the discretionary measures within the budget, they're going to have a mixed impact. So from a positive perspective, the reduction in superannuation tax concessions for low-income earners, the reduction in concessions for high-income earners, so they'll be paying more tax, as well as the low-income tax offset for low-income earners. The youth jobs plan will help get low-income earners into work, but then on the negative side, doctors' visits are going to cost more. It's going to cost more for tobacco. The tax cuts are only for middle and high-income earners. They're delaying childcare subsidies. They're removing the budget repair levy, which will help high-income earners, and they're not going to remove negative gearing, which will make the price of housing go up. So all of those will have negative impacts. So you could probably argue that this budget overall is having a negative impact on equity, particularly considering there are no tax cuts for low-income earners. Thanks for listening.